Welcome to the Explainer. Look, if you're doing business in the kingdom, VAT is just part of the deal. But the real million-dollar question for any business owner is, when exactly do I need to register? Because if you get it wrong, you could be looking at penalties. But if you get it right, you can really manage your cash flows smartly. So today, we're going to break down the official rules and give you a super clear roadmap. All right, so here's how we're going to tackle this. We're going to break it down into 5 key parts. We'll start with who even needs to think about this stuff. Then we'll get into the nitty-gritty of when it becomes mandatory. We'll explore some of your strategic options, walk through the actual paperwork, and finally cover how you get out of the system when the time comes. Let's jump in. Okay, first things first. Before we even get into sales figures or deadlines, we have to ask the most fundamental question of all. Does the government even see you and your business as a taxable person? Let's figure out what that actually means. So here's the bottom line. Are you doing something on your own to make money? That's really the core of it. It doesn't matter if you're a one-person shop or a huge company. If the whole point is to generate income, then for VAT purposes, you're likely a taxable person. And it's just as important to understand who this doesn't apply to. If you're an employee, you're not independent. You work for someone else, so you're out. Same goes for government agencies when they're doing their public duty. It's a really important line to draw. Are you in business for yourself or are you working for somebody else? So now that we know who's in the game, let's get to the main event. This is the part that matters most to businesses. What are the triggers that turn VAT registration from a choice into a legal requirement? This is when you absolutely have to take action. And this is the key concept right here. This isn't something you just think about once a year at tax time. No, it's a constant process. At the end of every single month, you have to do 2 things. Look back at your sales for the last year and look forward to what you expect to make in the next year. If either of those numbers crosses the mandatory threshold, a clock starts ticking. And believe me, that clock moves fast. The moment you hit that threshold, whether you're looking backward or forward, you have exactly 30 days to get your application submitted. That's not a suggestion, it's a hard deadline. Now, for businesses that aren't based in the kingdom, it's actually even more straightforward. You can forget about all those thresholds. The second you make your very first taxable sale here, boom, your 30-day countdown begins. It's as simple as that. Okay, so we've covered the rules for when you must register. But what if you're not quite there yet? Well, there are times you might actually want to register, either by yourself or with your other related companies. So let's dig into these strategic choices. And you're probably asking, why on earth would I sign up for more paperwork if I don't have to? It's a totally fair question. It might seem like a weird move to voluntarily join the VAT system, but believe it or not, there can be some serious advantages for your business. It really comes down to one thing: cash flow. See, if your sales or even just your business expenses cross a much lower voluntary threshold, you get the choice to register. And why would you do that? Because it means you can start reclaiming all the VAT you're paying on your business costs. We're talking rent, laptops, supplies, everything. If you're a new business with a lot of startup costs, that can be a massive win. Here's another really smart play: the tax group. Think of it like this. You can bundle a bunch of related companies together and treat them as a single entity for VAT. As long as you check these 3 boxes. Everyone's a legal resident entity, there's common ownership, and at least one of you is already a taxable person, you can file just one VAT return for the whole group. The best part? Any sales between the companies in the group become totally invisible for VAT. That simplifies your bookkeeping a lot. All right, so you've figured it out. You either have to register or you've decided you want to. Great. The next big question is, how? Let's walk through the actual steps to make it official. Honestly, the journey itself is pretty logical. First, you fill out the official application. The authorities might then come back and ask for some documents to prove your details. If they do, you've got 20 days to get those in. Once they approve it, you'll get your official certificate with that all-important tax ID number. And the last step is to make sure that certificate is displayed right where everyone can see it at your main office. You know what? Think of this as your pre-application checklist. Before you even start filling out the form, get this info ready to go. Have your company name and numbers, your contact details, your exact sales or expense figures, and the date you want to start all lined up. Seriously, being prepared here will make the entire process so much smoother. And please, don't forget this. Registration isn't just a one-and-done thing. It's a live file. If anything important about your business changes, you move, you change your main contact, anything, you are legally on the hook to let the authorities know within 20 days. you gotta keep your information current. Every business has a life cycle, right? And your VAT registration is no different. So for our final piece of the puzzle, let's look at the other side of the coin. The rules for when you must or when you can exit the VAT system. So there are basically two ways out: the path you have to take and the one you can choose to take. You absolutely must deregister if you shut your business down or if your sales drop way down for a long period. But you have the option, the choice, to apply to leave if your sales dip below that mandatory line, or if you've been registered voluntarily for at least a year and decide it's not for you anymore. Now, this is a huge warning, especially for anyone in a tax group. Just because the group breaks up, that legal responsibility doesn't just vanish into thin air. Jointly and severally liable is a fancy way of saying the tax authority can chase any one of the former members for the entire tax debt the group might have left behind. It's a big deal. So, there we have it. The whole journey, from figuring out who you are in the eyes of the taxman to knowing when you have to act and even how to bow out gracefully. If there's one thing to take away from all this, it's that VAT isn't some static thing you just tick off a list. It's a dynamic, living part of your business strategy. So the real question for you isn't just, are you ready? It's, is your business actively managing its VAT journey, or are you just letting it happen to you?